All right. Well, good afternoon, everybody, and welcome to the end-of-day market review for December 20th, 2011. We are almost at Christmas. I know I'm starting to enjoy a little bit of downtime from all of my activities. Hopefully you guys are as well. At any rate, my name is Jason Waugh. I am one of the trainers and success coaches here with Ideal Trading Lifestyle. I'll be walking you through today's presentation. Just going to get things started here with our disclaimer. If you guys could just give it a quick read. Once you've done that, we will get going with our agenda and the rest of the presentation. All right. So what do we have here? What we have is our agenda, and what we have is about 15 minutes or so worth of material to cover. What we're going to be doing is we're going to be covering the daily news, and that's really just anything that we think is going to affect the U.S. markets as a whole. We don't necessarily look at individual stock or sector unless we think that it's significant enough to affect the markets. We will look at the market outlook, which is going to include analysis on the S&P 500. Our goal is to identify support and resistance levels, as well as the current location of the MACD. We'll then switch over to our volatility indicator, where we'll be able to identify just how much volatility is in the marketplace, and then take a look at some of our current watch list picks. Now, there are quite a few on our watch list. We are not going to be looking at all of them. We're going to look at a handful, and we'll really just look at the first few. That way we can do some analysis together, kind of get an idea of what we need to be looking for, and then let you guys go ahead and make the final trading decisions yourselves. There was nothing to look at from Monday, so we're going to fast forward past that and really just wrap it all together by preparing for tomorrow. Now, if anybody has any questions along the way, please go ahead and send those questions in through the chat box. If you have any, we will review them at the end of the presentation. If not, we will call it a day and say we're done. So with that said, let's go ahead and start with the news. Today you're going to notice that the news was positive. All in all, people had a great day. It really is from some positive news that's come out of Europe. And it looks like the apartment sales actually has gone up a little bit throughout the day as well. So both encouraging news. Now, I'm just going to go ahead, though, and just jump into our S&P 500 right now to kind of talk about some of this great news that we had. This white candle here represents our great day that we had. We can see that the S&P 500 went up 35, nearly 36 points. That's good. For anybody who's been following the European debt crisis, though, you'll notice that we've had a few of these great days. In fact, we had some really positive outlook over here just before December. We had some really good positive days throughout November and for a lot of October. What I'm not trying to do is crush everybody's hopes or expectations that Europe is now fast forwarding and is going to be all clear blue skies. What I'm saying is that any type of recovery that we're going to experience from Europe is not going to happen in a perfectly straight line. There are going to be pullbacks. It's very possible that what we're looking at right now is day one of what is going to be a tremendous trading spree. It's possible. It is also possible that it's just a good day and we're going to have several bad days to follow. We as short-term traders, don't know. In fact, the experts don't even know. But what we do know is that we're going to take things one day at a time. And this is good. We can go ahead and we can trade off of today's news, but we need to make sure that it's followed up by some good, strong technicals the next day, as well as opening news and futures. So we're going to get into that. But what I really want to just emphasize is that this is good news for today. That's great. Let's see if this news is going to be substantial enough to keep it up for the next few days. So that said, looking at the S&P 500, we can see that we had a great day. So we are slowly, or actually very, very quickly, coming up to a resistance level. And it looks like that resistance level will probably end up being met at around 1250. Once it hits this resistance point, we need to figure out if it's going to continue to break through or if it's going to find resistance. What we do know is that currently the MACD has gone from declining bearish to rising bearish, and it even looks like that black line is trying to work itself up above the blue line and work itself back into bullish territory. If we have another day like today, there's a good chance that we can see both. For our advanced customers, this is the day that we have almost expected, because some of our indicators are really getting into the oversold state and have basically been saying that we really should have some form of pullback. All right, taking a look at our volatility indicator, VIX.X, we can see that this indicator has now dropped down to 23.22. That's very encouraging to see, because we're looking for this indicator to be below 30. And it's looking like it's getting lower and lower. In fact, it has not been this low. Let me just double check here. No, it has not been this low at all since we saw this original European debt crisis back in the beginning of August. So this is good. Now, again, just to play a little bit of both sides of the fence here, the volatility indicator has been known to be at its lower states throughout the Christmas months. So it is possible that this indicator is reading a little bit lower than it normally would at this time of day. And actually what I'm going to do, hopefully, is, Randy, I hate to put you on the spot, but Randy, I know that you trade options quite extensively. Is it possible to have you speak to this at all? Because I know that you might be able to give us an idea of what happens during the year end as far as options and whatnot goes. So Randy, are you online? It's possible he's not. I didn't even ask him.
Yeah, no, I'm here.
Hi, Randy.
Hi.
Sorry to put you on the spot, but I know you trade options a lot heavier than I do. Is there anything that you can speak to regarding this indicator and options?
Well, just the fact that when you're looking at options, you're interested in where, and anybody here that maybe is in this session that possibly has been through the options course will know that a big part of options trading is understanding the implied volatility, which generally usually ramps up during periods of high volatility. So essentially what we have been seeing with respect to the VIX is we've been seeing a lot of put options that are extremely highly volatile or overvalued. So now what happens is when the VIX begins to drop down here below 30, we start to see situations where the implied volatility isn't such a factor. And it's interesting you should say that, because I saw things turning around yesterday, and so what I ended up doing was buying some options on potash yesterday and did very, very well with them today. Potash went up, I think, close to $1.80 today. So my option that I bought in at was around $2.70 a contract, and I'm still holding it because it's on its way up and closed today at 310 or 315 a contract. So that's about a 15% gain in one day just on options contracts. So yeah, so what you're going to notice is if you're buying and selling options, the volatility isn't as much of an issue when you get below 30.
Very good. Well, thank you for that, Randy.
Okay.
And for anybody who has any interest in this options, we would definitely be more than happy to explain options a little bit more. We've got a course that is available through video, perhaps something that you will want to study throughout your holiday. So, getting back to what we're doing right now, we're getting to a point where it looks like people are expecting a little bit more stability in the marketplace. We definitely do need to continue to be aware of the fact that the European debt crisis hasn't been erased, and that there's still a very good chance that we can see more turmoil, and we might even see new lows, but with us being short-term traders, we're going to be taking advantage of whatever buying opportunities we can right now, and this is definitely starting to point towards the buying opportunity. So with that said, I'm just going to go ahead and we're going to look at the first few stocks from our basic watch list. And what we're going to be doing is we're going to be looking for stocks that are meeting or exceeding the market conditions. So we can be a little bit more picky since we've got a list as long as we do right here. And our goal is to see rising bearish, preferably with the black line over the blue, maybe even bullish if at all possible. So let's start with BCR. Now, it is possible that we're going to find a lot of stocks which are coming up against resistance, simply because the S&P 500 itself is coming up against resistance. So what we've got here actually is a stock with some good support which has been found, and it even looks like, since it's flattened out here, might have some resistance around there, but it looks like we've got some room to grow to that. Yeah, it's a bit of an expensive stock, but we do have a MACD which is rising bullish, black line over top of the blue line. Definitely a stock that we could look into a little bit more. If we look at its most recent activity though, we can see that it looks like it's broken out beyond its short-term resistance. So something to look at there. Let's take a look at another one, CRL. All right. All right, so this one doesn't look as good. Don't like the fact that it's been declining bearish, obviously, but the cycle lows are getting lower and the cycle highs are getting lower. So this has been downtrending for really since the beginning of November. It hasn't done anything to confirm it's stable and has found a level of support that it's happy with. So we're going to bypass that one. CUZ, on the other hand, is looking better in that we've got a cycle low which has gotten higher since its previous cycle low. It even looks like its cycle high is potentially a little higher too. So we found some support right here, like so. And now what we've got is resistance. First off, we had this breakthrough right here. And we're now trending up here. If we look at old cycle lows, we're going to go from that candle right there. We're free and clear for resistance there. And very short-term resistance, it looks like we've got a breakthrough there. So there's another one that we might want to look into. So by the looks of it, we've got a few stocks here that could end up being well worth our time. Let's just take a look at ELY and leave it there. It'll take a little bit too long to go through all of our stocks. So ELY, not a fan of. Looks like it's been ranging or trading sideways since it had its gap up over here at the end of November. With that, we can also see that it's right up against resistance. So we're going to leave that one alone. But definitely some stock to look at. And there's probably something that we could find that's rising bullish with the black line over top of the blue line. So with that said, let's talk about tomorrow. Basic and advanced customers alike. We are going to look for a stock that we find is suitable for our trading needs. We are going to keep a couple things in mind though. First thing, this has been one good day amongst a lot of bad days. So we're going to continue to trade with a little bit of caution. We don't need to go all in. We don't need to put all of our money into one trade. Rather, we're going to trade this conservatively. And if things go well, then great. If things do go poorly, though, we're going to say, you know what, at least we didn't put all of our money into it. It won't be that much of a burn. The S&P 500 is approaching resistance, so we might start to see some slowing down And we are also dealing with the fact that it's coming up to Christmas time. What we could expect to happen is we can expect volume to start to slow down to lower paces. So we really want to make sure that whatever companies we're looking at right now, that they've got a lot of daily volume. You want to see probably right now on the U.S. side at least 200,000 for your volume so that you can get in and be rested assured that you're going to be able to get out of that stock without any hassle. Definitely make sure that you're not holding on to any positions over your holiday, and make your trade short and sweet. So with that said, I don't see any questions in our chat box. Looks like everybody's good to go there. We will touch base again tomorrow and see how some of these stocks did. So with that said, have yourselves a good rest of your day. We will catch base tomorrow. Ciao for now.